So I think that I think they're doing the right strategy for them. And I understand concerns that people have around concentration, but it's an open protocol. They're buying a lot. They said they're going to buy a lot. They are buying a lot. Others have had 16 years to stack. Um, they still should be stacking other people. So I always like to see more diversified Bitcoin holdings wherever possible. But basically, I would say the most reasonable risk is just debt terms relative to the market cycle, which so far they've navigated, but it's always a risk.
Hi everyone, welcome to Smart Invest. Bitcoin's price charts, ETF drama, and regulatory race have everyone's attention. But there's much more going on underneath the surface. Global finance is undergoing a quiet revolution that isn't about making quick money. A new generation of serious players, including macro-strategists, multinational corporations, and sovereign wealth funds, are focusing on Bitcoin's long-term potential, while retail investors are alarmed by the daily volatility. Take a look at Michael Saylor's MicroStrategy, where it subtly transformed into a $84 billion Bitcoin buying powerhouse while distracting the public with meme coins. Although Wall Street mocked it and called it reckless, it was a sign of a more significant change in how institutional players now view Bitcoin as a core asset rather than a gamble. The old system's foundations are being shaken by this momentous occasion, which is only getting started. Bitcoin veterans and hedge funds alike trust macro expert Lyn Alden, who sees it as the beginning of something much larger. The resilience of Bitcoin is its true strength. Bitcoin remained online during outages, processing transactions block by block without missing a beat. While conventional banking networks froze, it is becoming the foundation of a system that is future-proof, because it has no central point of failure. We are seeing the beginning of a new era in finance, not just the emergence of a digital asset. Alden's point is very clear. Don't let the noise divert you. Remain patient, stay focused, and get ready for the rapid expansion that lies ahead. Let's now hear directly from Lyn Alden in her most recent interview. For more information like this, don't forget to like, subscribe, and hit the bell.
So I actually like the call. So I'm going to disagree with at least most of the negative takes. Happy shareholder since August 2020 when they announced the Bitcoin plan. So the funny thing is I didn't love the initial 21 plan um, because I didn't like the even equity and debt proposition. That, in my view, was more debt than I would have preferred, should they have issued it all. But I also pointed out in a tweet at the time that that's just an estimate because they can only issue as long as there's demand for it, especially the equity. And that's very easy to measure. If the premium's over NAV by a comfortable margin, it makes every sense in the world for them to issue more shares and buy more Bitcoin with it. And then the preferred, that's more of a complicated thing to measure, but basically bond market demand for it. And so when I went long MicroStrategy back when MicroStrategy, first they were buying Bitcoin, then they were issuing debt to buy Bitcoin. I was like, okay. Then when they were issuing like third and like second and third rounds to buy Bitcoin, I was like, is this getting a little bit much maybe? But then when they started issuing equity to buy more Bitcoin, I was like, okay, that's actually de-risking it. That's improving like the asset stack compared to the debt levels at the cost of share dilution. But that makes sense as long as the premium to NAV is high. And so it is true in that one tweet that they have issued that they've not issued as much debt as they said they were planning to. They've issued more equity, and now they're talking about issuing more. I think they're going to continue to be equity heavy, which I understand that some shareholders don't like. I actually prefer that because I view that as the more conservative strategy. The only thing that would ever really concern me about their strategy if they have too much debt, that opens them up to say a 5-year window where Bitcoin performs poorly, and then they enter some sort of liquidation cycle or troubled refinancing cycle, which is still, I think they're terming that out pretty well. But I always err on the side of caution, so I tend to like the equity focused approach. And also, I would say that buyers have to be cautious. They have to be responsible because back when MicroStrategy was trading at 3.5 times NAV, everybody on Twitter was saying it can go higher and higher. It can go to 10 times NAV. Why not? Why not go to the moon, right? And people were buying into that. So no wonder that some of them are going to be sensitive to share dilution because they bought at a price that is not conservative. There's no official range for what it can reach, but you're taking on a lot of risk when you're buying it 3 or 3.5 times NAV. So far, what I've done with MicroStrategy is that, for the most part, I hold Bitcoin. In certain brokerage accounts, I'll hold MicroStrategy. And whenever it hits like 3 times NAV, I actually trim part of my position out. So I've actually removed a big chunk of my, more than my cost basis. Everything I'm playing with now is like house money. And I plan to keep letting it run. And if it ever enters these periods of euphoria, I tend to take a little bit of chips off the table. Whereas if it ever kind of comes back down, sometimes I add a little bit more. And I think that's an approach worth considering, or at least whenever it's at a high premium, just manage expectations. They're going to dilute you. Every time the premium's super high, the market is basically screaming for them to issue more equity and buy more Bitcoin with it. I would say they're different. Saylor's been trying to get others to do the strategy since like 2020, and it took a while for it to happen. Now it's happening. I think it's good that there should be one in every currency block. So if you're, like Metaplanet in Japan makes sense. Uh, it's basically a free lunch in any sort of like currency market where there's not one of these to go make one if it's legal. Um, as far as multiple in the US doing it, there is a network effect advantage for being number one because you have way more liquidity. And like options markets are pretty challenging to get liquidity for because every single strike price and every single duration on the option is basically a different security. And so it's not just like one stock where there's a decent amount of liquidity. If you've got 20 different strike prices, based on 10 different durations of what that option is, that's 100 different option contracts, and it's hard to get all of them to be liquid on anything other than like the biggest one. That same thing happens with ETFs. So for example, if you're the top one or two in your ETF category, you're likely to have a liquid options market. Whereas if you're ETF number 5 in that category, your options market is going to look like a ghost town. So there's always going to be an advantage to the first mover, the largest, most liquid.
MicroStrategy's Bitcoin strategy is revolutionizing traditional corporate finance and has reached a whole new level. MicroStrategy's Bitcoin holdings have skyrocketed up 13.7% this year, alone far outpacing legacy investments. While the majority of hedge funds find it difficult to keep up, they aren't slowing down either. Their most recent capital raise nearly doubled their previous goals, further encouraging the accumulation of Bitcoin. What began as a small software company has grown into a full-fledged Bitcoin accumulation machine that uses the sale of premium stocks to raise new funds, which they then immediately invest in more Bitcoin. It's like printing free money every time their stock rises above book value, and they're using that loop to fuel a relentless, aggressive growth engine. Naturally, the backlash was swift. Critics have compared the model to a Ponzi scheme and called it dilution. What started out as a 3-year plan is now developing on a quarterly basis. However, its creator, macro-strategist Lyn Alden, is unconcerned. While Wall Street uses its own fiat-driven logic to amass the hardest money ever created, she is playing chess and Wall Street is playing checkers. MicroStrategy is going to war financially, not just investing, and people are beginning to pay attention. The outcome. Officially, a corporate arms race for Bitcoin has begun. This is the first act of the Bitcoin standard, so it's not just a daring move. Let's now examine the interview in more detail and get straight to the source.
Sure. So as I outlined before, I would be concerned if their debt levels got relatively high. It's hard to measure exactly how high too high is, but generally speaking, the more debt there is relative to their equity and their Bitcoin, the more of a chance that they could run into a bear market problem. Now they are terming that out pretty significantly, so they're doing calculations to basically say that Bitcoin would have to be in more than a 4-year bear market for them to run into serious trouble, where they'd either have potentially trouble refinancing their debt, or having to sell Bitcoin in order to meet their obligations. But that is one of the negative scenarios that could happen is if they get over leveraged and Bitcoin enters a longer than normal bear market. Other potential tail risks are hack risk. As far as I know, they diversify their custodians. I haven't kept up on all of their filings, so I don't know if that changed or if they moved that around. But I know historically they had 3 different custodians that they used. So forgive me if I'm not super up to date on what they're doing with that. And also tail risk of, it's a giant honeypot. If the U.S. government has a problem, they know where the Bitcoin is. Same thing for BlackRock. So Bitcoin IOUs are not the same as Bitcoin. So I think that I think they're doing the right strategy for them. Um, and I understand concerns that people have around concentration, but it's an open protocol. They're buying a lot. They said they're going to buy a lot. They are buying a lot. Others have had 16 years to stack. Um, they still should be stacking other people. So I always like to see more diversified Bitcoin holdings wherever possible. But basically, I would say the most reasonable risk is just debt terms relative to the market cycle, which so far they've navigated, but you know, it's always a risk. I'm bullish because Bitcoin works, which people I think often forget or take for granted. So, for example, one of my banks is a Big Four bank that I use for international wire transfers and business banking and all that kind of boring stuff. Um, and like all day today, they've had wires offline because of some technical vendor issue. So just can't send wires. Just money's just stuck in this little controlled pocket. Whereas Bitcoin's still putting out blocks, still working. There's always drama around it, but it's still working. And I think that people forget about that. And I would say that as far as this whole kind of corporate centralization thing, none of that impedes Bitcoin from working. It's not even at the current time raising fees. I mean, that one of the concerns, obviously, when 10x more people want to use Bitcoin, there could be fee pressure on the main chain, which could elevate smaller users to higher layers of the network, which has trade-offs. But at the current time, you have kind of the perfect world, which is that there are these big pools of capital buying it, and yet it's a permissionless network. Anyone's free to use it. Um, I would like to see more people directly use it. I would like to see more retail buyers buy it and take self custody of it. I invest in businesses that try to make that possible and encourage it. So I always like to see more of that. But Bitcoin works. And I mean, if people are concerned around MicroStrategy buying or BlackRock buying or governments buying, basically what they're saying is that the weakness of Bitcoin from large entities, like the way that they want to kill Bitcoin is to buy it. Like if that's Bitcoin's weakness, if large entities buy it and that hurts it, then it was never meant to be.
Yeah.
I look at metrics like because it's proof of work, not proof of stake. I'm somewhat less concerned around ownership concentration. It still affects price potentially, but I'm more concerned around market functioning. So I look at things like miner centralization, miner supply chain centralization, mining pool centralization, um, things like that. Um, node distribution, stuff like that. Less around the custody aspect. And in addition, so a lot of people are also concerned around stable coins eating into Bitcoin's market share for payments. Um, which one, it's not taxable for the most part, so entities gravitate toward that. And also for people that are using it as like working capital, so savings for like 3 months that you're going to send around and receive payments. People, a lot of times, especially in emerging markets, people spend in a month what they made in that month. They can't risk a 10 or 20 or 40% drawdown, which Bitcoin can do sometimes. So they have like these working balances. But part of Bitcoin reaching that level is when more and more entities own it, and it's 5 times larger than it is now. And you can't have like a single like FTX in the Bahamas blow up and then send the price around, affecting everyone's money. So part of the maturation process is that more entities buy it. That'll include small entities, big entities, potentially sovereign entities. Pretty much the whole stack is buying it. If it ends up being a global reserve asset and a global reserve money, it basically means everybody's going to own it in some way or another. Now, the path dependence still matters. The ideal, optimal, the utopian scenario is all the little people get in first, then the bigger people come in, and like nation states are last, right? You don't want like Apple to come out and buy, and become the biggest Bitcoin holder after they've already kind of played the fiat game really well for 3 decades, right? But as a permissionless network, you can always choose who figures it out earlier. That's why a lot of us engage in education. Like, I mean, most people here are they have platforms or they individually work with people to help people learn about Bitcoin, self-custody Bitcoin, just relentless education to try to get out there and say, hey, before companies come in and just bid up the price to, multiple six figures, try to learn about it and buy some. Um, so I think people can keep doing their part for education. Um, and everyone has their kind of like, there's different things you can do. Like you can educate, you can invest in companies that make it easier to self custody, um, all sorts of things you can do. But basically, everything I'm seeing now is still good for Bitcoin. And I'm bullish because it continues to work.
This is about destroying the basis of fiat accounting, not diluting stock. The bold message of MicroStrategy's Bitcoin play is that the current financial game will end once CFOs begin valuing treasuries in Satoshis. By 2030, MicroStrategy might own 10% of all Bitcoin if current trends continue, transforming their $84 billion wager into something far more than just a business strategy. This brings us to the topic of monetary sovereignty. Imagine a single publicly traded company owning more Bitcoin than the majority of countries do in gold. The ramifications would be enormous. The SEC is being compelled to regulate what is effectively a Bitcoin derivative as MicroStrategy transforms into a de facto Bitcoin reserve bank. Lyn Alden makes it very evident that the goal is to establish Bitcoin's legitimacy as a worldwide reserve currency, not merely to chase alpha. Each coin that MicroStrategy purchases is a new component of a parallel financial system that contradicts our preconceived notions about currency, value, and control. Saylor's approach goes beyond accumulation and directly challenges the antiquated reasoning of fiat. The current system is clearly flawed when a former software company can outmaneuver central banks at their own game. Alden also identifies a broader pattern. People are choosing the privacy and independence that cryptocurrency provides over the fiat model, which relies heavily on surveillance. Bitcoin is a rebellion as well as an asset. The true question is whether the legacy financial system can even withstand what is about to happen, not if this strategy is effective. Tell us in the comments if you think Alden did a great job, or if there is more to the story. Please hit subscribe and like.